The housing bubble burst is already baked in. This should come as no surprise to anybody who's been watching the market for the past couple of years. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is July the 5th. We are deep into the summer now. Hope you're doing well. Randy Patrick here, putting the realism back in real estate. This video, of course, is brought to you by our friends at Foreclosure.com. So if you want to find out and take a look at the distressed listings and the properties that have a lot of opportunities in your backyard, your neck of the woods, go to gethousingdata.com. That's gethousingdata.com. That's my affiliate link. It'll take you to this page. You can take a look at what's going on. Sign up if you'd like. There's a 7-day free trial. Again, gethousingdata.com. All right, check it out because stuff we talk about is reflected in what's going on with this data. So I wanted to sort of talk a little differently today because really things are moving at an accelerated pace now. One of the things I think I just maybe pride myself a little bit on is the fact that I'm not just sitting here as some talking head who's regurgitating what he hears on mainstream media or other people's videos, etc. As a matter of fact, I look and read a lot of articles and everything. I don't watch the other videos because I don't want to have my opinions influenced as to what's going on. Certainly I can see the thumbnails like you guys can, but I don't listen to them because I want to have my sort of perspective as I guess you could say untainted as possible. But also what I think I do is I bring sort of like the feet on the street and the realism into what's going on because I'm actually out there doing the business, all right? I'm talking to buyers, I'm talking to sellers, I'm working with large investor groups that have the money, that are looking to purchase properties at discounts. So we kind of know what's going on. And quite frankly, we see the stuff like the feet in the street. The actual investor community sees the changes and sees what's happening before it kind of grows and actually gets played or manifests into, and we'll call it the retail real estate market, which eventually gets picked up by the mainstream media and the news. So that's kind of the position I'm always finding myself at. We're a little ahead of the curve here. So when I say everything is moving at an accelerated pace right now, I really do mean that. What am I saying? Well, more real estate investor interest and activity. What I mean by that is people now are starting to kick the tires on what's going on in the marketplace and take a great interest as to what's going to happen, what's actually happening now, what's going to happen in the next few months. Getting involved into many partnerships and arrangements. I'm starting to work with a lot of people out there who are looking to purchase property and who are actually jumping on board with what sort of the stuff I do specifically and in that detailed world of short sales and foreclosures, etc. And they're augmenting their business plans to include this on a very large scale. It's happening right now, guys. Off-market properties, we're seeing the past couple of weeks, I've seen a very significant increase in off-market properties that are sort of, we'll say, hitting, like we'll call it the email chain, etc. A lot more activity out there right now. We certainly are seeing an increase in on-market listings, so stuff that's listed in the local MLS. I know Realtor.com is reporting like a 19% month-over-month increase in active listings. We're seeing that in our area, and we're also just sort of seeing just more activity. So, you can see sellers that come out of the woodwork right now. We're also seeing price reductions. So whether that's on the off-market stuff that's being reduced in price or the on-market MLS-type listings that are having price reductions, we're seeing a lot more of that go on as well, which to me indicates that the market is changing. People want to sell, people want to cash out before it drops too low and they miss the opportunity. Inquiries have certainly gone to a fever pitch. Of course, people, reach out and say, hey, find me a home, and they're very specific of what they want, which I do have to laugh because, in this type of market, it's, and let me caveat this, everybody wants a great deal in the bargain. Of course we all do. I get that, right? But, going down to the nth degree, 3,200 square feet, 4 bathrooms, 5 bedrooms, on the water, I want a bargain, blah, blah, blah. Stuff like that's not going to happen yet. So you got to have some realism with respect to what you're looking for. And people who are saying, how can I get into the game? I'm talking about people who are like, yeah, I've watched this for the past little while. I've seen what's happening. I really believe the housing market's changing. How can I get in the game? How can I get my primary? How can I learn to be an investor? How can I just participate? So the interest level is increasing, all right? I think people, everyday people, mom, pa, investors, small investors, large investors, real estate agents, everyday people just want to participate. One property deal average people who want to just learn to invest in the real estate community. It's now people are becoming more interested. They can see the writing on the wall, which I think is fun, and that's good and it's interesting. Hopefully, I can help everybody. But that's the scoop, though. So when I feel all this stuff, things are changing. But my comment though is that don't let this pass you by. So I look at this upcoming housing correction, crash, etc., however you want to call it. This will be a second chance at a once in a lifetime opportunity. Now, the last housing crisis was a once in a lifetime opportunity. And the nice thing about the last housing crisis is we got to participate in it. We got to see how it played out, and we actually got to figure out how to take advantage of the situation. So sitting on the sidelines is tough. Don't sit on the sidelines. Don't watch. Don't let it pass you by. This is the second chance at a once in a lifetime opportunity. Granted, we don't have a crystal ball. Nobody has a crystal ball, but we do, as I say, have the time machine where we can go back and take a look at what happened the last housing crisis, see how it played out, and figure out how we can position ourselves to work within those confines as to what's going to happen in the future. Now, a long time ago, I realized, you know what, you can't fight hedge funds, you can't fight government and Wall Street, whatever, but you have to know how to work with them and around them and in between the seams. That's where the great opportunities are. So what I'm saying to people is, guess what? All right, don't hedge. All right, don't hedge. People that say, I'm not going to buy any property till it hits rock bottom pricing. Well, you know what? Do you know when it hits rock bottom pricing? When rock bottom pricing is already over. Why? Because real estate is a drag along, tag along, sort of market where you don't find out when you've hit the lowest point until it's already been passed. All right. So get into the game now. Reach out to me. Let's talk about stuff. Now is the time. I'm dead serious, guys. Okay, we've been talking about this for years. It's actually starting to really manifest and happen now. So please get into the game. What am I looking for? Agents in Florida. Okay, yes, this is a little PR commercial. We'll talk about what's happening the next minute here. Okay, looking for agents in Florida, obviously in my area, other parts of Florida. Why? Because I'm not going to be able to handle the volume that's going to be coming our way. Simple as that. Great opportunity here. We're also looking for agents in other locations eventually. We're going to sort of cherry pick the places we want to invest in, etc. Additionally, the short sale program is back for a limited time. Reason being, because we need to start doing more of this now. This is a great opportunity now. There's more people that are facing foreclosure auction. There are more people that are having their foreclosures filed against them. This is what we can do to help people and help ourselves at the same time. So please keep that in mind. Additionally, doing a lot more activity here in our local area. I have a real estate investment club, which I have some partnerships with. So it's called My Tampa Real Estate Investment Club. Look for us on meetup.com. Join the group. We have monthly meetings, at least one monthly meeting, if not more, and it will pick up as the summer goes on. So please check it out. It doesn't cost you anything to attend any of these meetings if you're in the area. There's my land. Well, there's the normal meetup page there. Join the group. You're going to get on the distribution list, so you're notified when we have events. Probably have one next week or the week after. So there you go. Okay, guys. Why I mention this? Why the housing bubble bust is baked in? Well, I really like this article. Reason being, because it says that it's clear that the source of the current housing bubble is the explosion of financial speculation fueled by central bank policies. All right, which is very interesting. So we know that the Fed has mismanaged the housing market over the past couple of years. They've printed money, they've bought mortgage-backed securities, they've kept quantitative easing for as long as possible to encourage overbuying, overspending. The result has been a run-up on the housing market, the home price appreciation. It's pretty much out of control. We're going to see that start to change right now. Those benefiting from speculative bubbles have powerful incentives to deny the bubble can bust. Exactly what my point is. In other words, if it's not in your interest to say we're going to have a housing correction and housing crash, you're not going to talk about it. As a matter of fact, you're going to do everything you can to reverse the narrative and say, oh, these guys over here, they don't know what they're talking about. The housing bubble bros, whatever, don't listen to them. Don't worry about what's going on in the marketplace. You keep buying that home. It's going to appreciate. What a great investment. All right, well, guess what? Things have changed, and funny how things have changed in the matter of a couple of months with respect to mortgage rates, interest rates, of course. That's changed the dynamic of the market. That's made people think twice. That's actually going to usher in the housing correction. And quite frankly, the Fed and the government, they know that they can't run this market the way it is or how it's been the past couple of years. And, there's going to need a rationalization that's going to have to happen in this marketplace to kind of bring it back down to earth, because right now who can really afford a property? It's becoming less and less out there. And is buying or owning a home something only for the elite? What about the working class person? Why can't they? Why can't those families purchase it and have homes? All right, so it's out of control. It's too far to reach. We have to have some rationalization, normalization, correction in the marketplace to bring it back down to earth, kind of like what happened a few years ago, as we all remember. Okay, so this is really interesting. Bubbles arise from speculative excesses. Once these reach extremes and reverse, bubbles burst when all the self-serving rationalizations are revealed as rationalizations. There you go. So basically, the article here is going to talk about some of the caveats, etc. Housing is local. There may be locales where prices are still rising due to unquenchable demand and low supply. Other places where demand is low and supply is ample, where the prices will start to plummet. So we're going to see that the housing market is not going to crash, generically across the U.S. at the same time. It's going to be metro or market specific. Each will have its own pace. Each will have its own kind of demographic and fallout, etc., and loss or gain, so to speak. All right. Number two, the wealthiest 1% on a global scale is a very large number. Wealthy buyers seeking a safe haven in North America will come with cash and don't care about mortgage rates. That's right. So the average person, needs to get a mortgage and is going to buy with a mortgage rate, and it's concerning us. But people who are buying cash and buying as investments typically don't care, and they'll purchase and they can do what they want. If that's, that could even be driving the price point up still. Okay. Desirable enclaves could see home prices climb even as the national housing bubble pops, which does happen from time to time. Wealthy investors are holding a large number of dwellings off the market as investments. These empty units consequently reduce the supply in desirable locales and create an artificial scarcity that would not exist if central banks had inflated the everything bubble. Very true. So yes, there are stuff that's being held off the market by hedge funds, by real estate investment trusts, by lenders, by the government, etc. And they're waiting. Again, how do you create a growing market? Well, you control it, right? If you go back in the last housing crisis, you can see how it was controlled from that point, because if all those foreclosures flooded the marketplace, prices would have dropped to nothing, and we wouldn't have had a recovery, or the lenders wouldn't have made money, or Wall Street couldn't produce. So again, things are controlled. The more you realize how the control works, how the market's manipulated, the better you understand the market, and then you can participate within the seams. All right. The number of homes bought by corporations has soared. This has driven demand in many markets, but if rents dive due to a recession, corporate buyers become corporate sellers. So you know what? The past couple of years, corporate buyers, hedge funds, REITs, whatever, large investment firms are buying properties because rent was increasing even at a faster pace than home price appreciation. So they could afford to buy at the peak of the market because rent was outpacing that, or rent increases were outpacing that. Well, if things change when rents correct, and as time goes on the next year or two, they will become buyers when it doesn't make sense anymore. So they can buy, they can sell when it doesn't make sense. They can kind of, they're elastic. They can ebb and flow with the marketplace. Basically, they're saying, okay, that those are some caveats they mentioned here. Let's look at the foundation of home ownership for the bottom 95%, which is the majority of us where we hang out. As mortgage rates rise, more income must be devoted to the monthly payment. If household income lags the increase in housing prices, price eventually exceed what the bottom 95% can afford once mortgage rates rise. So we've always mentioned that home price appreciation has far outpaced wage growth, and that's the big delta. It gets larger and larger every month, and that's problematic. At some point in time, it's got to correct to adjust for what's happening in the real world with real people. All right, first chart is Case-Shiller. Basically, note that housing prices have soared 63.6% since the previous housing bubble peak in 2007. That's enormous, outpacing inflation, which is up 41%, and also the median household income, which is up 34%. So again, home price appreciation has blown by inflation and wage growth. So please remember that. That's not, it's not smoke and mirrors. This is what's really happened. That's why we're in the situation we're in today. Basically here, we take a look at, it's obviously increased with respect to household income. So you can see that 2007, the average income was $50,000. Right now, it's about $67,000. So increase to 34.4%. But basically, again, home price appreciation 63%. So pretty tough to be buying properties at that point in time, or any point in time when everything's being outstripped by home price appreciation. So it is interesting. In this case, mortgage rates have broken out of a 37-year downtrend. It is noteworthy that mortgage rates were in the 7 to 8% range in previous economic booms, but now 6% mortgages are considered the end of the world, which is true. This suggests a dependence on cheap money. Low rates is the primary support of the current bubble rather than an organic economic expansion as we enjoyed in the 90s. So this is true. So basically it's almost like this is phantom money or funny money or virtual money, right? Hey, mortgage rates are so low that it makes sense for you to buy a property, makes sense for you to purchase instead of rent. You go and buy that property. You've got great mortgages that were out there previously, 3.5% down, FHA-backed loans, high debt-to-income ratio, low credit scores. Anybody can get in and buy a property. So this is the type of stuff that fuels an increase in home price appreciation on an exponential level, which is what we've had over the past couple of years. Now, these next slides are interesting, okay? It sheds lights on the housing fundamentals, which that's where it all comes down to, is like, let's look at fundamentals. And when you actually start taking a look at what's going on, it makes so much sense. That's why this should come as no surprise. People know there's a correction that's going to happen. And as I said, it's about positioning yourself to take advantage of how this all plays out. So basically, if you look at this chart here, and I'll put the link to the article in the information section of the video, the first chart shows the rate of growth population, employment, and housing units. The U.S. population increased by a scant 1.5 million since 2019. The number of employed was flat, and the number of housing units increased by 2.8 million. So basically, what it's saying is the fact that we had relatively slow increase in population, and we had a little bit faster pace of increase in housing units. And again, housing units are not necessarily that's not single-family homes. They could be apartment complexes, multifamily, duplexes, quads, single families, whatever it is, right? But again, it's housing units, housing people. And I know the past 3 or 4 or 5 years, we've seen a significant increase, especially in the multifamily side. The 100+ units. I mean, everywhere you look, all these apartment complexes are going up, right? And just that's the way multifamily works. It's absorbing the need for housing at this point in time. Second chart shows the Fed funds rate, FFR, the staggering increase of mortgage-backed securities purchased by the Federal Reserve to keep mortgage rates low, declining rate of population growth year over year, and the remarkable rise in number of housing units under construction. So I know that I think with respect to new home construction, we're actually at a surplus right now. So we always talk about a balanced market being about 6 months worth of inventory. I know that the housing new home market has more than 6 months. Last I saw was about 8 or 9 months worth of inventory. So we can take a look at the U.S. population, which is the blue line. The year-over-year growth is actually going down. We're not increasing. Families aren't, we're waiting later to find a partner. We're waiting later to have kids. If we do have kids, we're not having 2 or 3. We're having 1. That's what's sort of happening. The Fed fund rate, as we know, basically got down to almost zero or about zero up in 2021. We can see that they were continuing to really purchase mortgage-backed securities at a high pitch rate after the last housing crisis. And when we take a look at, we can talk about new homes under construction. We can see that it's pretty much grown on a pretty pretty good level, but the past couple of years it's actually spiked up exponentially. What we don't see here is the fact that new home prices are at record highs. Why? Because of materials, material price points, labor shortages, and therefore it's now reflected in house, median house price points for new home purchases. So we can see how this all plays out. But realize the population hasn't grown that much. But the Fed and everything else is sort of working through the housing market, trying to incent people to move forward here. So third chart shows housing units per capita, which is per person, which has reached the same level as the previous housing bubble peak in 2007, 2008. I find this really interesting because the population, has gone up sort of, very linear, sort of a slow linear. The housing units, same thing, as it's gone up every year. It's the same linear. And when we take a look at the housing units per capita, clearly we're about the same. We actually are at the same level as we were on a per capita basis back in 2007 and 2008, which is the last housing crisis. So realize that part of the reason why people will, or the mainstream media, or those journalists that are for housing and everything's good. And again, please, when I say for housing, clearly I'm for housing. I'm just for cheaper housing for everybody. Okay, that's my kind of platform. But the point, though, is that when we have low inventory, all right, when you actually look at a per capita basis, we're at the same level as we were in the last housing crisis. So if we, and the reason why people are saying we're not going to have a housing correction or housing crash is because we have less inventory. Okay, it's supply and demand. Well, we're at the same supply and demand per capita as we were back in the last housing crisis. Okay, so what's kind of changed here? Well, I think this next sort of statement kind of makes more sense. Housing units per capita against the U.S. population should suggest a shortage of housing units, but a surplus of dollars to which to buy them. Should suggest not a shortage of housing units, but a surplus of dollars with which to buy them. So here's the point. We have the same amount of housing units per capita available to us, all right? But the dollars surplus, the money available is high. Okay, that's what's there. Investor money, mortgage money, all right? Low interest rates up until this past little while. So it was the encouraged to consume, the encouragement to spend, etc. So therefore, when cheap money means let's go buy stuff, right? Which means there will be a drag on demand, and it will look like there's a shortage. But when it comes down to it, we're kind of at the same place we were in the last housing crisis, which is really interesting. So putting this all together, it's clear that the source of the current housing bubble is the explosion of financial speculation fueled by central bank policies. So when we actually go to things like when people talk about why we're not going to have a housing crash or how we're not in a housing bubble right now, all right, they always go to the same basic points. And I've made this comment on numerous times, right? It's because we have better mortgage products and more control, so there's better borrowers. Okay, great. All right. Well, what about subprime? Well, we don't have subprime, but we have FHA. That's a lower standard of mortgages, so disagree with that. And then they go to supply and demand. We have low supply. Well, it shows that this last chart shows that our supply is kind of the same we had on a per capita basis as the last housing crisis. All right. Then they go, well, it's speculation. We have more investors that back in the last housing crisis. Now today's buyers are retail buyers. Well, I don't think so. We just came off talking about why there's so much more corporate buying going on, and the fact that that's the deal here is the fact that we have more buying, we've had more money that's going, and it is speculation. All right, so speculation is corporate buying. And remember, leading up to the COVID and then even through COVID, when you had groups like Redfin reporting going, oh my goodness, we're having, each one of our listings is having 20 to 30, or whatever the number was, multiple contract scenarios where there's buyer bidding wars. Well, you know what? Isn't buyer bidding war when you're bidding 50K, 100K above list price? Isn't that speculation? Aren't you speculating that, number one, that it's going to fall within, it's going to make sense, the value is going to go up to I guess you could say, absorb what you overpaid for? Is the appraisal going to come in, to absorb what you overpaid for, et cetera, right? So really, we have been speculating. We've been speculating for the past 4 or 5 years. It's simple as that. Before COVID hit, we were bubbling. We were showing our hand with respect to having foreclosure filings. We were actually getting ready to go down the path of having some correction issues. And COVID came in and it changed the market dynamic. It actually stopped foreclosures. It caused an increase in price point because of the market being constrained. No distressed properties coming on board. We're all speculating. We're all bidding against each other in inventory. So that's how the market's been controlled. That's where we are today, guys. So this shouldn't come as a surprise. When you lay it all out here, it makes perfect sense and it's logical. All right. So try to debunk that. You really can't. I debunked it the other way, basically saying we have speculation. It's just in a different format. It's a broad-based speculation with retail and investors. Except last time was just investor market. Okay, so there you go. So basically, housing prices that far exceed the growth of household incomes are not sustainable, and neither are housing prices that rose solely on the basis of unprecedentedly low mortgage rates. So guys, this is going to happen. It's just a matter of how. Well, we know how it's going to play out. Every month it just takes time. I know it feels like it's taking a long time to get there, but trust me, it's actually happening now. So as I said, get into the game. Okay. It's also clear that those with access to the temporary wealth created by the central bank's trillions, the new credit, have poured many of these free money trillions into housing globally as a hedge against inflation for rental income. All these factors exacerbate an artificial demand and equally artificial scarcity. All right, simple as that. Basically, as the guy says, I've noted in the past that bubbles typically manifest asymmetry in their ascent and decline. All the gains are eventually reversed, and if the system is destabilized by the bubble bust, then prices drop far below previous lows. So setting aside rationalizations in favor of fundamentals, the housing bubbles bust is already baked in. And again, we're not talking about far off concepts here. This guy is talking about housing fundamentals, which he's nailed it. So it's right there. I mean, you can choose not to believe it. You can choose to ignore it. You can choose to go down the mainstream media ways of doing things and just hope for the best. But you know what? That's what happened last housing crisis, and people got caught. So as I said, be aware of what's happening. Jump on the right bandwagon at the right time. All right, simple as that. Okay, guys, this has gone on a long time, and I'm sorry for it. But hey, first of all, if you're not a subscriber and you appreciate the information that I put out on the channel here, if you could please smash that subscribe button, I really appreciate that. And if you think you're a subscriber, do me a favor, just reaffirm your subscription, because I lose more than I put on, so I appreciate that. Thank you very much. All right, and again, we're seeing more articles about this now. The cities where housing costs are likely to drop. I love this quote. We've squeezed a decade of home price appreciation into a year and a half, okay? Which really does make sense. We've done so much growth in a matter of 18 months to 2 years. It's actually kind of ridiculous here. So just trying to get through this because, yeah, I'm kind of approaching the 30-minute mark here. Basically, we're looking at situation here is that mortgage rates are cooling off after sharply rising. Expect home prices to start slowing and dropping, even in some of the most overheated markets out there. So all these consultants now are going to come out and tell you where they think it's going to play out, how bad it's going to get, if it gets bad. You know, some are going to say, yeah, we'll drop, but still be home price appreciation year over year. So listen, it's all rolling the dice. Let's all be safe. That's what I get from all these, these journalists who were saying, no, home price appreciation keep going up, no worries. Now they've come back with, okay, we got to sort of admit that things are changing, but they're not going to admit it's going to crash. Lord knows we can't say it's going to crash. We have an affordability crisis, and guess what? We'll see maybe only single-digit appreciation, not double-digit appreciation in that couple of years. Well, you know what? I beg to differ on that. Essentially, what people are saying is that you're going to have some, home prices decline, mid-single-digit percentages over the next 2 years. Basically, locations where they think this is going to, really hit is the ones that have grown so fast. They look at the number one location as Boise, Idaho. Basically, likely one of the first markets that'll flip negative. Rate of change going pretty fast, opposite way now. Simple as that. Saying Boise is the poster child of home price deceleration, I guess, in the future. Likely to be followed by declines in places like Austin, Texas, Las Vegas, Nashville, Phoenix, Riverside, San Bernardino, Salt Lake City. So some of those locations, Austin, Nashville, Phoenix, Salt Lake City, have had massive appreciation year over year, and eventually it's got to make some changes, right? According to Redfin here, about 46% of homes in Salt Lake City and 44% of homes in Boise that were for sale also had their prices slashed, so we're seeing that. Realtor.com showing almost 19% increase in the number of new listings. Places like Vegas, Riverside, San Bernardino were hot spots for last housing crash, so it's going to happen again there as well too. So I guess you could say the typical players from last housing crash will be here, adding some new ones in, like in Austin, like a Salt Lake City, like some of the West Coast locations, upper Northwest, whatever. So this is what's going on. Shouldn't come as any surprise, all right? But the point is that, when you actually take a look at fundamentals, as I mentioned, okay, it's not because the market's not going to crash because I want it to crash. It's actually going to crash and correct because of market fundamentals that are baked in are actually showing themselves right now. And when you actually pull back all the layers, it's really hard to argue or disagree with what they're actually saying. As I mentioned, time will show the hand of the housing correction. Unfortunately, it takes longer than we would like because we are in a world where we get information, real-time information right away, and we're not patient anymore. I'm not patient. I want this to happen now. It's happening, but again, it's happening right now. Remember, my first part of the video today is like, what's going on? So the feet in the street, the investors in the community, the boots on the ground, feel it, see it, understand it first, then it manifests through retail, then eventually gets picked up by mainstream media. That's the way these things work in our lovely housing market. All right, guys. Again, engage me. Let's get going on these things. Short sale opportunities are picking up. You want to get involved. You don't want to let this pass you by. As I said, the worst thing, don't hedge. I'm not hedging. I am going all in every aspect of my business to get stuff done, to acquire, to do deals, agents, products and services, working with investors, acquiring stuff, building my own portfolio, whatever I need to do the next 3 to 4 years, because it's how long it's going to take for all this to play out. It should be a very exciting time. You should be excited. Jump on board, get a hold of me. Let's talk and get you involved in something that we're doing here. All right, guys, appreciate the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. I look forward to speaking with you later in the week. Thank you.